All right, guys. Thank you so much for coming to today's live Technical Tuesday trading session where we're going to talk about certain setups that's taking place in the market, especially for the Euro USD and US Japanese session. Now, before we begin, if you guys have any questions about anything, just let us know. If there's something that you may not understand in today's session, just let us know. I know we got a few emails last week, so if you guys have any questions about anything that we're sharing, anything that we're talking about, even if it's stuff that's outside of what we're talking about, just let us know because we really want to provide some value for you guys. But with that said, we're going to look at these charts. We're going to look at primarily the Euro USD and the US dollar Japanese yen. And we're going to try to tell you what we're looking for or what we're expecting from this particular pair and or those particular pairs. So good morning, John. Good morning, Brandon. Thank you guys for coming. But with that said, let's move forward and let's talk about what's taking place on the Euro USD pair. I'm going to try to do this as quickly as I can. I know we only have 25 to 30 minutes. And I'm just going to get straight to the point and tell you guys what I'm expecting for these particular pairs. So then right now we're looking at the Euro USD. And I don't know if you had the chance to watch last week's Technical Tuesday session. What we mentioned was that price was pretty much in consolidation and it was trapped within this ascending channel, which is really a weekly bearish flag pattern. If you go to the weekly chart, let's drop back. Or go back to the weekly, or go to that higher time frame. What you can see is that price has been really moving in consolidation. It hasn't really been moving anywhere. And what we have right here is what we can clearly see is a bearish flag pattern. And now let me ask you guys a question, especially if you were with us on the last Technical Tuesday session, or if you saw last week's Technical Tuesday recording. Whenever you see a pattern like this, like a bearish flag pattern, then what do we typically expect on this particular pattern? Does it hint to a potential move to the upside or a potential move to the downside? Now, this is long term. This is like overall. This is based on the weekly time frame perspective. We're not assuming this is going to happen on a 1 hour or 4 hour or 15-minute. What we're assuming is that for the long haul or over the long term, we should see a move in a particular direction. And I know John mentioned that we should see a move to the downside, and that's exactly what we should see if we get a break and close below this trend line. So then if we get a break and close below this trend line, we can see price drop all the way down to around $1.10 level, where you have this candlestick right here and this support right around this area, this structure area right here. So then there's a possibility that we may see that sometime this year. However, in the meanwhile, we need to look and see how price is moving within this consolidation, within this bearish flag or this ascending channel. So then with that said, what we're going to do right now is drop down to the 4-hour chart, because that's where we did most of our analysis last week. So if you go down to the 4-hour, let's do that right now. So let me expand this out. Okay, so on the 4-hour, we can clearly see price action. We mentioned how I think not the other week, not last week, but the week before last week, we saw price push lower, and there was a false break of this ascending trend line support. And on that false break, of course, the market gained some liquidity, or the market makers absorbed all that liquidity from the stops that were below, because there was buyers positioned right along this ascending trend line support. And all those stops got triggered. And that added to the liquidity in this move to the upside. And whenever you see this type of price action takes place, this is what you would call a turtle soup price action. Let me just type it for you. Turtle soup price action. Whenever you see that type of price action in the market where you see price push beyond these lows right here to absorb the stops. And then whenever you see a nice strong push in the opposite direction after it took out the stops, then that's what you would call a turtle soup type move or a turtle soup type price action. I know this is from one of our private groups. It keeps popping up, so I apologize for that. But with that said, now we're having price push higher, and is pushing higher, and it tested this zone of resistance that we drew in on our chart a few weeks ago. So this area acted as resistance. Yeah, okay. Yeah, I apologize for that, for the pop-up. But yeah, this area is acting as resistance right now, structure resistance. This is a 4-hour structure zone of resistance. And ever since then, you know, we've been seeing price fall. And right now, price is falling and correcting to another zone of 4-hour structure support between 1400, the 1400 psychological zone, and the 1425 level. So then let me just draw that in for you guys so you guys can see that. Now, you know why this is support. It's pretty apparent. Well, let me just draw in this zone first. I'll just do it from maybe from here. But this is good enough. From 1400 all the way to 14, let's do 25. Around here, this is good enough. Oops. Yeah, this is good enough. And let me change the color to stay consistent with the theme. So then we have this structure area right here, and it's pretty apparent. You can see if you was to look at this chart right now, you can see that this zone function as resistance right here, resistance, support right there, resistance, resistance, and support right there. So then on multiple occasions, this particular zone was respected. And what I want to do is show you guys something unique. I'm going to use this as a teaching moment because oftentimes the market moves harmonically. Yeah, I know Marvin's my brother. Yeah, I didn't introduce. Yeah, Marvin, could you? Yeah, like this is Melvin, guys. My name is Melvin. For those that may not know, this is my brother Marvin. He's we actually run Forex Anatomy together. I don't know if you wanted to greet everyone before we move forward. Yeah, I was going to say good morning, everyone. Thanks for joining us. But I was going to also add, you know, we have dynamic support with that 100 simple moving average, which is a pretty apparent, but I guess the key is to identify that structural zone that's serving as an area of demand. And that's going to be key to, you know, how we analyze the EUR USD. But we may cover a little bit of some fundamental intermarket perspectives if we have time later on to support why we may see this particular pair move in a particular direction. Yep, exactly. So then, you know, we see price hitting this zone of structure support or demand, whatever you want to call it. But price hit the zone. Now, I want to use this as a teaching moment because there is something that we see. Remember, guys, we talked about the market being symmetrical and harmonic in nature. Oftentimes, you can define or get an understanding of where price may go by looking at price history. The market tends to repeat itself. The market moves in symmetry and harmony. And you have to understand that if you want to sort of forecast and predict what's going to happen. So in this case right here, we see this correction. And this is what you would probably consider to be an ABC pullback or an AB equals CD move. And what you typically see is that the market always has moves or corrections that are similar to previous moves or previous corrections. So then in this case, we have this first move. Lower right here. This is what you call move A to B. So we're calling this A equals B right here, or AB. This is line AB, and then we have line CD. And on certain pullbacks, this line CD will be equals to line AB, and this is what you would call an AB equals CD type move or pullback. Let's drag this right here to the top, and you get boom right here in the same area, right? Price is in the same area where we found support before, support right here, resistance right here, resistance, support, support. And what I want to let you guys know is that the market moves symmetrically and harmonically. It always leaves footprints for you to follow, and that is what gives us an edge. If you know how to read the footprint or the tea leaves, you can sort of figure out what price may potentially do. So then right now, because we see this AB equals CD type move or pullback, what we're looking for right now is a buying opportunity upon bullish confirmation. And I can't get into all of the entry reasons right now. That's more so reserved to our premium members of our Forex Anatomy private trading community. But right here is where you should be looking for a potential buying opportunity, right around this zone right here. So then let me just place an arrow, and I'm going to place a green arrow right here. You should be looking for a buying opportunity somewhere in this zone upon bullish confirmation. And if you do buy, you can target the highs right around here of this last swing high if you want to, because if you look to the left, you can see that this area was an area of structure right around here. You look with these wicks right here, and then you look left, you see this was resistance right here, resistance right here, resistance. So then what you can do is just target the highs right here if you want to be safe. But that's a particular trade example that you can look for on this pair, but you have to look for bullish confirmation. And I can't get into all the entry reasons right now because that's the key and magic behind our particular trading at Forex Anatomy. But I hope you guys got something out of this particular setup or ideal. It's pretty simple. Once you understand support and resistance and supply and demand and how the market moves symmetrically and harmonically, you can sort of get an idea of what may potentially take place in the market. So yeah, I know Marvin wanted to share a few things, and I think it's important for us to also share why this could potentially happen in the market. I know we did have some data that came out. I don't know if you wanted to talk about that.
Well, yeah, I was just pretty much going to touch on like what you mentioned earlier about how it's important to just wait for those confirmation signals, those reversal signals, those bottoming patterns. In this case, if you choose to buy, and like the thing, is that even for Euro USD currency pair, like the reason why we're seeing a rotation into the dollar at the current moment is primarily due to the strong labor market. We've been seeing tightening conditions in the labor market, and it appears as if the U.S. economy, well, we know that the U.S. economy is doing fairly better than most of your other global economies that's sort of struggling and suffering from signs of global slowdown and what's happening in China and just what's happening across the board with geopolitical concerns and different things that are applying pressure on growth. We're seeing that the U.S. economy is still fairly resilient. We saw solid ISM manufacturing PMI numbers on last Friday, along with, of course, job growth numbers. So then when it comes to the U.S. dollar, that's sort of like a favored currency to trade into. It can serve as both a good carry currency and, in many cases, a good safe haven currency. But in this particular case, it's serving as just good for carry, or just good because there's expectations that the Fed, even though they're adopting a more dovish tone at the moment, that may not be sustained throughout the year, especially if we continue to see upbeat economic data coming out of the U.S. economy. And so then, of course, even with Melvin's buying bias, that was primarily due to what I mentioned just a few seconds ago, how we know that the Fed is currently pushing the brakes on the hiking cycle, and they're choosing to remain patient and not, not hike rates and not gradually do it. They're going to wait to see how things turn out with the U.S.-China trade negotiations. They still have yet to see the impact of the U.S. partial government shutdown. And then there's other concerns as well going on, like even Brexit-related concerns that may impact global markets across the board. So then at the moment, it's wise for the Fed to remain more dovish and choose to actually, hold off on hiking rates. So then that would translate into U.S. dollar weakness. So then Melvin's decision to buy would be contingent upon us seeing a confirmation signal, a bullish confirmation signal that would indicate a continuation of dollar weakness and a move to the upside. But you got to also look at Euro USD is analyzing two different economies. You also have to look across the pond and see what's going on in the European Union. And from what we've been seeing with the European Union, with their Syntex investor index dropping to, I don't know, it's like 5 or 6 year lows, and just a lot of weak data coming out, and signs of them moving into contractionary territory. And also the idea that Italy has now been officially declared under recession, or in a period of recession. That may translate into ongoing or more euro weakness. So then, in this case, for the Euro USD, it's still kind of hard to say what's going to happen, and that's the reason why you got to look for those technical patterns to fully form, and breaks of key levels of support and resistance before you're able to truly know what's going to happen in this particular currency pair. But yeah, that's pretty much what I wanted to share on the fundamental side regarding Euro USD. But I know Melvin's bias is to the upside, but there's also a case for it to slide lower. But in both cases, you want to see whether those key structural patterns are formed and whether they break key levels to identify what's going to take place, what's going to happen.
Yeah, so then this is alternative number 2. Let's just say that price continues to remain bearish and we get a break below this zone. Then the next zone you have to look at is this zone right here. Let me just draw it in for you. But let me move this right here to get more. Okay, so then yeah, we'll look at this zone right around here, between around 1365 and around 1390. Yeah, this zone is the next zone that we have to keep on our radar, because price could push deeper into this zone right here, which sort of has confluence with this weekly ascending trend line support, and we may find demand right in this zone or area right here. We just have to be prepared for whatever comes in the market. Remember, in trading, it's all about being fluid and flexible. You can't be rigid. Just because you have a bias and something that you're looking at doesn't mean your bias could change. And what makes you a good trader is when you're willing to change and pivot, when you're willing to adjust. I know right now we're looking for a buying opportunity around here upon confirmation, but if we don't get that, then we may look for another buying opportunity down here. That's just how we're trading for now. We're just looking for confirmation signals to come or in these zones to support a bullish move to the upside. But that's that. I don't have too much to share with you guys on a Euro USD. Are there any questions before we move on to our next pair, which is the US dollar Japanese yen? Okay, going once, going twice. Okay, so yeah, there's not any questions. So what we have to do is just wait and see what happens. And if we do get a buy signal, I'll definitely let you guys know in the free signaling room. I know I haven't sent a signal out for that in that room in a while. So then I'll definitely send something out if we do see that bullish signal take place for the Euro USD within these zones. So yeah, I'll definitely let you know. But right now we just have to wait for the trade to come to us. We're not chasing opportunities. We're waiting for the opportunities to come to us. All right. So with that said, I guess we can move on to our next pair, which is the US dollar Japanese yen. And this one is pretty interesting because I know I sent an email to you guys not too long ago about what we were expecting from this particular pair. But as you guys know, I think last week during last week's Technical Tuesday session, we mentioned how we saw this equal measured move, or what we thought to be an AB equals CD move. And right at the end of this move, we're at point D, which is at the 110 psychological level. We saw price consolidate. Price consolidated. And that's what we was looking for. We was looking for that consolidation or topping to take place, primarily on the 4-hour chart. If you look at our weekly outlooks, you would know that we predicted that this would happen like weeks in advance. We predicted that price would go to this area, start consolidating on a 4-hour, and then we'll see a push lower. So then right when we got this push lower, we was expecting to enter in a sell trade on a pullback or retracement in price. But as you can see, momentum really kicked into the bullish side, mainly due to NFP or non-farms payroll. For those that may not know, the U.S. employment data came out last Friday, and we saw this pair become bullish ever since then. The market exceeded expectations as far as the job numbers, and we saw a push higher, and right now price is testing this 110 psychological zone of resistance. This zone of resistance, let me just, well, you guys get the point, but it's right around the 110 psychological level, the 110.00. Price is flirting with this level right now, and if we get a clean break above this level, then we can definitely assume that we may see more movement to the upside. So right now, anything can happen. As of now, we can still see the bears take control since this level or area is still defended. I know before I was looking at this level right here, I said that if price breaks above this level, then look for a shorting opportunity. But based off of what I'm seeing right now, I mean, if price breaks above this level, look for a buying opportunity. Yeah, I apologize for flipping that around. But since we're respecting this 110 psychological level right now, we still haven't aborted our sell buys yet until we see a break and close above this 110. This is a key level that price will have to break and close above before we become bullish on this pair. And we may just become bullish. I mean, we don't know. But one thing I want to share with you guys is something that's very important. It's another pattern that you guys will see typically take place in the market. Because we saw price push and break above this trend line. Let me just draw this all in for you. You saw price break above this trend line right here. It sort of expected it. You know, I was looking to sell somewhere around here, this whole area. But as you can see, price broke to the upside. But I want to show you something unique because, like I said before, remember the market tends to move symmetrically and harmonically. And what we could be seeing is another unique setup taking place. And before the week began, usually, like if you're a member of our private lab trading community, I sort of give an idea of what could potentially take place in the market. And I mentioned how we could possibly see price push and test this 110.78 level right around here. And I marked this level and I was pretty specific with that based off of what I know about how price typically moves. Once you start analyzing these charts and you get thousands of hours of chart time, you can sort of predict and forecast certain levels where you may see turns and swings take place in price. So then there's a possibility for us to get a break above this 110 level and for price to float and push all the way to test this 110.78 level. Now, let me show you guys how the market typically moves in symmetry and in harmony, because we have this AB equals CD move. And what I want to do is share with you guys something right now. So then if we clone this line, and if we drag this same line, if we drag this line all the way to this swing low right here, where does price go? Right to this level right here that, you know, I talked about, the 110.78 price level, which is a key level. Really, I can't get into the specifics behind why I identified that level. You would have to be a member of our private trading community in order to know that. But we may see a projection and an extension to this 110.78. And if we do see that, then we have what you would call a three-drive pattern, a bullish three-drive pattern. You have, let me just draw this in for you. You have this first drive right here. Then we have, of course, the pullback. Then you have the second drive. And then, of course, we have the pullback. We have this pullback. In this case, the pullback is to this area. And now we have a possible third drive taking place. And price could push and test this area right here. So we could potentially see a move to the upside on the US dollar, Japanese yen. But in the meanwhile, what we want to do is look and see how price is responding for the US dollar Japanese yen. It looks like prices resisting to 110 level and it's consolidating. So then this is what I'm going to do. You go down to the 1 hour chart. You can see a potential topping taking place on the 1 hour. And if we get a break and close below this low right here, let me just draw this in. If we get a break and close below this swing low at 109.78, the price breaks below this low. Let me just draw this for you. If we get a break below this low, then look for price to retrace and correct to retest this area of structure, 1 hour structure support, before looking for a selling opportunity. So then that's what I'll be looking for the US dollar Japanese yen. However, if we do get a nice decent break and close above this 110 psychological area on the 4 hour chart, if we see a 4 hour break and close above this particular level, then what we can do is look for opportunities to buy on pullback. So then if you get a break and close above this area, just wait for the pullback, and then you can trade this higher. And if you wanted to, you can trade it higher all the way up to, guess what, this zone right here, or to this 110.78 area that we identified. So then that's what we're looking forward to for the US dollar Japanese yen. I know we're almost at the end of our particular session, but this is how we're going to trade. We're going to look for these two potential scenarios to take place, because that's how you guys have to trade. You have to have an if-then philosophy when it comes to trading. Like, if this happens, then do this. If price breaks this level, then do this. If price respects this trend line, then do this. That's how you have to trade. That's how you trade professionally. Because right now we don't have any static, rigid approach to the market. Anything can happen. We want price to sort of tell us what we should be doing. So price is leading us, is telling us what we should do, and we respond to whatever price gives us in the market. So then that's what we're doing right now. So guys, are there any questions about anything? Like, I know today there's, I think, risk appetite in the market today, right?
Yeah, there's more of a preference for risk-oriented assets at the moment. There's not too much risk aversion, and that could be ahead of we have US ISM services non-manufacturing data coming out, and even I don't know, there could be some optimism over tonight's Trump State of the Union and what may come out from that as well.
Yeah.
But yeah, there's but the US dollar Japanese yen, it was surging primarily due to fundamentals and just, like we said earlier, rotation out of the safe haven yen, but it's consolidating at the moment, primarily because of US 10-year Treasury yields. We saw them level off and sort of scale off. So then the cap that we're seeing in the US dollar Japanese yen is sort of related to risk sentiment at the moment. So then, although during the Asian session we saw a lot of risk appetite, that may change quickly as we move into the US trading session, and we may see a rotation lower, possibly into the safe haven if we do see those patterns form. But yeah, like, this is the economic calendar, and there's really not too much we have on the docket other than the services PMI, which is expected to come in at 57.2, which is a few ticks lower than the previous value of 57.6, but it's still in expansionary territory. And of course, any good number from ISM services would definitely boost the greenback and support a rally in US dollar Japanese yen. But later on tonight, we have US President Trump speaking, and this is sort of like the wild card. We don't know what may come out. We don't know what he may say. So then, of course, investors, traders, going to be sitting on the edge of their seat, sort of analyzing, sort of waiting what monkey wrench or what surprise may be thrown in. But there could be signs of optimism. I know they sound like, of course, his administration, they sound pretty hopeful and optimistic about the U.S. and China trade negotiations. There's been talk of them sort of moving closer, but you hear different headlines. Some say, no, we're far from a deal. Some are saying, no, we're actually gaining ground. And so then, I don't know, we may hear some more about that, as well as, U.S. security issues, national security with the border concerns. So then that would be for tonight. So then We don't really have much on the calendar that may impact the dollar, but these things definitely may provide some level of volatility when those announcements and situations happen. So
Yeah. So yeah, before we close, I want to mention something. Even for this pair, like if we do get a push higher into this zone and see this 3 drive pattern complete, then we could see a nice fall or slide to the downside, a nice one. So of course, I'm not going to get into all the details of that yet. If you guys want to, you guys can become a member of our private trading community. You can take the $1 trial. Just test this out for 14 days to see if you get any benefit from it. And I'm pretty sure if you guys look at the training tutorials, our video tutorials, our weekly outlook videos, if you guys participate, then you guys will gain a lot from it. You guys will eventually turn into professional traders. I know you've been seeing pop-ups, and that's one of our members submitting something to us privately, saying exactly what he's been doing in the market. He's been doing fairly well trading and submitting some of his trading ideas. But of course, when you join our community, you will learn the right way to trade the markets, and you will learn the right way to manage your money. And to be honest with you, trading is all about risk management and money management. If you have good risk management and money management skills, and you apply some of the techniques that we're sharing with you guys now, even though this is just the tip of the iceberg, this is not even anything compared to what we teach within our private trading community. But if you apply good risk management, good trading psychology with some of the techniques that we apply, you will eventually grow your account and do fairly well. But I'm not going to hold you guys hostage. If you guys want more information on that, you can go to forexanatomy.com/the-lab.
link at the bottom of the page.
Yeah. There should be a link at the bottom of the page that you're viewing this presentation on. You can just go to that link and join just for $1 and just test us out. But all right, guys. Thank you guys so much for coming to today's Technical Tuesday session. I hope it was beneficial to you guys. I hope you guys got a lot out of this presentation. If you guys are looking at our video, please like the video. Please share it. Please comment. Let us know that you guys are gaining benefit from these videos or from these sessions, because it pretty much encourages us to keep on giving you guys good information and give you guys value. So just let us know. Just like it, share it, comment on the video recording, and just let us know, because that helps us out as well. It gets the word out. But thank you guys so much for coming and for even watching today's session. We hope you guys were blessed by it. And we'll definitely see you guys later. I know Brandon, he's part of our private trading community. So then, yeah, we'll definitely see you tomorrow on our live trading session on tomorrow, Brandon. So thanks a lot for coming. But until we meet again, we hope you guys have a wonderful rest of your trading day. Just pay attention to these particular setups, when they form in the market. And I'll let you guys know when I decide to enter these positions as well. But that's it, guys. Thank you guys so much. And we'll definitely see you guys soon. All right, guys. Talk to you guys later. All right. Okay, then. Goodbye.